The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 17th, terrific Tuesday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call Progress Requires Change. You know, with every ending, there's a new beginning, and therefore, progress requires change. Most of us celebrate change once a year, New Year's Eve. In the upcoming future, just a few weeks away. Shouldn't every day be a day for a new beginning? Something to think about. Yes, folks, progress requires change, and we should look at the universe from the viewpoint that everything is alive and growing. Everything is in a joyous motion. New combinations, they appear in front of us all the time, especially if you trade patterns in the stock markets, and depends on what time frames you're trading. New opportunities, folks. New opportunities exist all the time, and the interactions with people, well, they are the ones that actually touch our soul. New opportunities spring up around us each moment of every day, and if you are an adventurer, the time is now to begin your next adventure. You know, for time, it just simply does not stand still. That's the one certainty that we have in life. Change is the one constant in our life. And everyone likes change, right? Of course not. We only want the changes we like, not necessarily the ones that we get. Think of it like this. When a seed falls or is planted in the darkness of the earth, the seed's outer shell must break so that a new life can emerge. We can and we should learn from the seed. Breaking the shell can be painful, just as when we move from the known to the unknown. Yes, in one sense, we're losing something, such as our outer shell. Yet we are gaining. We are growing. And that's just really around the corner. Gain and growth. Can it get more exciting than that? I don't think so. Because if you're not growing, guess what? You're not really living out there. So we need to embrace change because progress requires change. So we need to eliminate the phrase, this is not time for change, because it's like saying, this is not time for new blessings to come into our life. We can't do that. Growth, folks, it's a must. Physically, mentally, spiritually. Here, let me give you this example. For those of you with kids, for those of you that have been in your home for a number of years, right now, or take yourself, maybe you're at work, maybe you're listening on your radio or your mobile device at tfnn.mobi, but go back to the time frame when you used to go measure your kids on a wall. Some of you still have those marks somewhere on one of your walls out there, or it's a door out there. You can go take a look at those lines. Now, what I want you to do, because it's always so important, is for us to be able to anchor positive images, especially when it comes to change that's going to take place. Picture the smiles on your kid's face, or faces, if you had more kids, as they were growing. That's the type of moment that you want to anchor in your life. Let that moment be a way to change your state so that you are accepting of change, so that you are wanting change. Because those kids, they wanted to grow. They want to change. I'll bet some of you out there, actually, even if the kids didn't grow, you moved that line up just a tad, just so that they could see change out there. Embrace change, folks. The time is now to break your shell. Face adversity with courage. If you're facing adversity, face it with courage. Don't do it from weakness. Weakness will garner nothing good. You cannot come from a state of weakness. Face adversity, and guess what? You'll be rich with educational gifts. Adversity, it's really our milestone. Find it in your heart to welcome change. Pythagoras, he once wrote, no man is free who cannot command himself. Well, it applies to women as well. Action, folks, action and reaction, ebb and flow, trial and error. Progress just simply requires change. Look, I thank each of you each day for allowing me to make extraordinary progress, for allowing me to be able to better understand the ebb and flow of the markets. I get to do this for, well, more than just really a couple hours a day. It's my favorite thing to do. You know, knowing where something is at is one thing, but understanding where something is likely to go to, like being able to see in the future, that's a whole nother thing. That's why I've spent so much time, so much energy mastering buying and selling the D point. That means taking a look at those A to B equals CD patterns. They allow us, they help us to identify with tools, gauges as to where the market is likely to head to. That's why using those Gartley and butterfly patterns, that means we're going to go ahead and take a look at the Fibonacci retracements and expansions that are going on. That's why we take a look at candlestick charting and understand where the bulls and the bears are hanging out, where the wars, where the battles are going on. That's why we take a look at primary trading range lines. Primary trading ranges, probably primary trading range lines. I don't think lines is a word out there. I caught that, didn't I? But the thing is, folks, even mastering all of those things, they didn't answer the question. It's the most important question, which is why do those indicators fail? And that's what led me to develop the Rhodes Momentum Indicator, the market analyzer, the whole trading strategy. And that's what I'm going to be doing Thursday evening. I'm going to be sharing with everyone wishing to feed their mind. And, most of you have had some breakfast already, so you've fed your body. It's so important to feed your mind each day. And I'll be sharing with folks the system that is so easy to use, so easy to understand. It takes complex data and makes it simple. And it really does that because, if we take a look at folks that we can learn from, I'd say Albert Einstein, he's a pretty good guy to learn from. Pretty smart guy. Could never, he's a 10. I'm a negative 10. It doesn't matter. He said this. He said everything should be made as simple as possible, but not simpler. And that's exactly what I've done in creating this system out here. I could only wish that if I were beginning my trading experience now, that this was a system that would have been taught to me. Because it's about understanding the momentum of the market. It's not about trying to sell the top tick. It is not about trying to buy the bottom tick. If you want to do those things, what you need to do is you need to learn the lightning bolt pattern. It's really as simple as that. You need to learn how to buy and sell the D point. You need to understand swing points. You need to understand volume at those swing points. That is also helpful. But that lightning bolt pattern, which I'm happy to teach you, and I can teach you, I consider myself to be even an expert of experts when it comes to those patterns out there. Folks, I've taken this system here. It's called the Rhodes Momentum Indicator. It's easy to get access to it. We've made it so simple here at just in Albert Einstein's words. We've made it as simple as we possibly can, not simpler. We're offering a 30-day free trial to my newsletter service. You've got to put down your credit card is not charged. You get access to all this for 30 days free. No real commitment on your part other than, and that's always dangerous because when you're not making a commitment, I know that what happens is you end up kind of blowing it off. It doesn't become a priority. And I'd like this to be a priority for you. Look, for those of you that have been to one of my workshops, maybe you're a prior subscriber, what I can tell you this is going to be my finest hour. I didn't think that I could say that after the last workshop that I put together, but this will be my finest hour, and therefore yours too as well. Folks, don't be a prisoner of your past. Instead, be a pioneer of your future. Go over to the homepage at TFNN.com. No procrastination. Sign up now. If you can't be there on Thursday, no problem, because you'll have access to it. And no better time than the holiday time period to be able to spend some time and really allow me to teach you something about the markets. Now let's go check out these markets here. Dow futures up 28 points right now. They're trading out at 15,851. S&P futures, they're trading up about 3/4 a point out at 1781. NASDAQ futures trading out at 34.62. King dollar up a nickel right now. That's trading at $80.28. A little bit of pressure here on Goldilocks and silver. Gold is off about $11. Silver down 31 cents. It's traded at 19.79. Light sweet crude is flat out here. We're seeing natural gas pull back a bit today as well. So that's beginning to work off its overbought condition, or at least that's at a minimum what it is doing out there. A quick peek around the globe. Let's see what we've got here. Mixed bag over in Asia last night. Nikkei finished up 125 points. That was 0.8%. The Hang Seng, that was down 45 points, down 0.2%. No big deal out there. Down nearly 0.5% was the Shanghai. That was off $10. Over in Germany right now, the DAX is off 17. The FTSE is off 19. So kind of a quiet market after some real big fireworks yesterday. Of course, the fireworks really took place at the open as we came into that 9:30 session out there. And then really the day was kind of flat. Well, I guess I should say this. The market moved up for the first half hour or so, and then it really became just kind of a ho-hum day out there. And maybe that's really the case here with the FOMC meeting beginning this morning, ending tomorrow afternoon. Maybe tomorrow afternoon we see some additional fire. Heck, maybe we see them before then. But in the meantime, you can give us a call at 877-927-6648. if you give us a call, we'd be happy to take a look at your stock chart. So where do we begin out here? Where do we begin in taking a look at this market? Let me see here. Where should we? Well, you know what? Let's go take a look at Goldilocks and silver. Let's first go over to gold and silver since they're the biggest movers in the market. Let's go see what is going on there. Again, gold is trading back $11 right now. It's back into the June 28th swing point. That June 28th swing point, the high is 1234.80. The low is 1179.40 out here. What we do know thus far is that the coming off of its last major swing point, and that's really the C point of the A to B equals CD down. That is the time frame from October the 28th out here. That is at 1361.80. If you go from that high to the low that we've seen here during this C to D leg that is unfolding, and in that C to D leg, the low thus far is December 4th. The price point out there is out at $12.10. If you go from the high to the low, you'll see that at $12.68.50, that's your .382 retracement. That's your dead cat bounce. Not a whole lot of strength inside of Goldilocks here. Really what gold wants to do, at least, at a minimum, is get down and test at $11.78.90. Could be lower than that, but $11.78.90, that's the test that we'd all like to see out here. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams.
Over the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. I moved to Florida in the early 80s. And, each of us, we have a story of our life out here. Certainly I do. I think it's a great story out there. And the story's not over, just, moving into the next chapter. And I've had incredible experiences with the opportunities to travel around the world. But when I came to Florida in the early 80s, my mission then was to computerize small business America. That was my mission at that time. I came in contact with using computers from a business standpoint and this is during the personal computer revolution back in the late 70s. The first computer that I actually touched other than a terminal was an Apple II. And at that stage, I was working inside a public accounting firm, a regional public accounting firm. And, look, so I'm a bean counter by nature, and that means that I used to have these big old tablets. I don't remember, what were they called? 13-column, green-looking tablets out there, what have you. All of our transactions were done by hand. Talk about being rudimentary out there. And so came in contact with these computers. Remember first taking a look at the first spreadsheet. I wish I could remember the name of the first spreadsheet package. I don't remember, something calc. It was not an Apple. It was actually on a PC. But in any event, I came down to Florida with the mission of being able to computerize small business America. Now, I was able to live that dream because I started a division of a publicly held company called Intercomp at the time, back in the early 80s. And in 5 years, we took that from zero to $100 million a year in annual revenue. So it was some pretty major growth that went on. And as a result of that, I became the largest reseller of IBM, Apple, compact computers. So I got all kinds of stories out there. Now, I was reminded last night after I received an email from a listener, and maybe that's where we'll go with today, because he was giving me all the reasons to consider taking a look at a short position inside of the markets. And this is really not to debate whether one should be long or short, but we'll go take a look at a stock chart, and we'll play should you be long or short, or where are the short signals, where are the long signals out there, just by taking a look at the stock chart and forgetting about what the news is. But my whole point of the story is, in having that experience, because I was Apple's largest reseller, and yes, so I met Steve Jobs and Wozniak and even Scully a few weeks after Jobs was let go, and also had the opportunity to meet with all the guys at IBM. And IBM put us through some different schooling. We were just young lads. They wanted us to become a little bit smarter. So they put me through this little Harvard Business School class that they had. It wasn't held at a Harvard campus. It was at a nice facility on the Atlantic Ocean, up in the New York area. And what was great was they were teaching us the core principles of Thomas Watson out there. And his core principle, the one that I remember the most, the one that stuck with me the most out there, was that what the IBMers would do before they would finally go make a sales pitch or whatever deal it was that they were trying to do, what his principle was, what his core principle was, I'm talking about Thomas Watson, founder of IBM, was they would sit in a room and they would say, why did we lose this deal? why were we wrong with regard to all of our conclusions after everybody had done everything? And he said the most amazing thing was when you took the other side of the trade, when you took the other side of where you were so confident that you were going to win the deal, you realized when you really were able to open yourself up to the other side, in essence, in this case here for what we do, I call it the other side of the trade out there. It really opened up your eyes. And that's something that each of us should do. You know, when it comes to gold here, and you always need to make sure you understand your time frames that you're trading on. And to me, that also means you need to at least understand what's going on one level up and one level down below you. So if you're on a daily time frame right now and you are trying to take a long position in gold, you need to understand the weekly chart, which is on my screen here. It's got the Rhodes Momentum Indicator on here, and it's telling you no chance, no way, not unless you're a bottom picker. And why would you actually need to do that other than the thrill of being able to say, hey, I bought the bottom in gold and it was at 11 or 12, whatever it might be. What you want to do is you want to kind of picture, you know, if you've ever been out in the ocean or a lake or what have you, and you see these little schools of fish, and they all of a sudden start turning the one way or the other. That's really what this system does. It helps you understand where the larger school of fish and where they are turning to. In the case of Goldilocks, it's going to need to at least clear 1275 at a minimum and hold that level on a weekly chart as we speak here right now, as of 9:29 a.m. out here on December the 17th. That level could change tomorrow out there. But on the longer term for gold, we were talking about going in that first break on the short term for gold. Looks like it wants to make an A to B equals C. In gold, I'm telling you, there's been really no buyers in control with the exception of maybe about 2 weeks' time inside of Goldilocks. We'll be right back. We're going to go take a look at the markets, and we'll see should we be long or should we be short. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow. It's trading up 6 points, trading out at 15,890. S&P is down 1.5 points, trading out at 1785. Composite down 4, trading out at 4,024. Russell 2000 off $1.30, trading out at 11.18. Apple's up 59 cents. Google up 72 cents. Cisco up 13 pennies to the upside. Herbalife up $3 and change, trading out at $78. Plus, iRobot Corp, IRBT, that's trading up 10% here, up $3. 3M, that's up 250, up 2%. KKR Financial Holdings, that's up 25% out there. Looks like that is a buyout out there that is going on. You got Williams Companies, WMB. That is trading up about $1.70. Boeing is up $1.94. Baidu up $1.29 this morning. Western Digital up $1. To the downside here, you've got Sherwin-Williams, SHW. That's trading off $4. Rockwell Medical, RMTI. That's off $2.40. Targa Sept. Yeah, that's it. TRGT. That's off $1.95. Rayonier. RYN is the ticker symbol. Don't know that I pronounced it properly, but it's trading off $1.38. FTI Consulting down $1.25. Catamaran Corp, CTRX, that's off $1. That's trading out at 45.17. Our call number is 877-927-6648. Give us a call, folks. We can take a look at your stock charts. So let's go take a look here. Let's start off. We're going to look at the Dow futures. So we're going to try to identify bullish or bearish signals out here. And we're going to do it by starting and taking a look at the longer-term time frame. That way, what we're going to do is we're going to cover everybody that's really in our listening audience. And, you know, it's always important to understand. So the people that should really be taking a look at a monthly chart are folks that are managing their longer-term funds out here. So we'll just simply start with the Dow futures as we speak right now. Now, what you're watching, if you're watching on Tiger TV, we're going to pull out all of the tools for us to take a look at this. So the tools that are on this screen here, because I know that, Basil made it back yesterday, and that is just terrific. That is inspiration for each of us here. I believe he's taking today off, and will try to be back with us tomorrow. I think he's trying to do this on the QT when his wife is not looking. I think that was a story that I heard out there. But on the screen here that you're looking at, the Ensign Windows software that I'm using here, we're going to show you all, guys, at TFNN, there are so many great tools that each of the contributors provide to us. So we're going to take a look at all of these different tools that are out here. I'm going to start with the monthly chart. Now, what I can tell you on any chart that you take a look at, that there is not going to be a top that is at least cemented until you see some type of bearish reversal signal. And now, it can be a blendy. It can be a blended candle. It can most certainly be two candles. That means you would stitch 2 months together. But at a minimum, you've got to see some type of reversal candle. If you see, now on my screen here, just because it's green does not necessarily mean that it's bullish. But in this case here, if what you would need to see inside of the Dow, and we've got, it's only the 17th, so, we've still got 13 days, 14 days. I don't know how many trading days we actually have left in the cycle out here. But right now, as we speak, and that's how we really have to take a look at the markets on a monthly basis here, the Dow futures that we're looking at here, the Dow futures have not provided us with any kind of a bearish reversal candle. They just simply haven't. So if we take a look at candlesticks, which are a requirement in order to show reversal. Now, this is not about trying to sell the top tick. This is about just understanding where are we right here, right now on December 17th out here. No bearish reversal signal yet. You can see some blue horizontal lines. You can see one dark horizontal line going across my screen. Those are what we call, or what Bud Rolfs has taught us about, primary trading range boundary lines out here. Now, I've created a tool on this system that automatically takes a look at all the data on my screen. I've already done it, so this is the monthly data going back into May of 2002. Takes a look at all the data out there. And what it does is identifies the largest number of co-located opens or closes. It doesn't matter whether it's an open or close. It doesn't do it right to the tick. It gets you right inside the range. And what this tells us is that the dark line going across my screen at 10,425, that happens to be where price has come to either open or close at the end of any month more than any other locations. Now, the other levels up above that and below that, you've got, now this is a little bit different than the way that Bud uses. Of course, when Bud had created it, he didn't have an automated tool to go out there and search, so everything had to be done visually. In this case here, I'm just taking advantage of data, taking advantage of the tools that we have available to us. So if we utilize this system here, and it works really well, it helps us to identify areas, horizontal levels where price travels within. Now, in this case here, what we can see is that this 15,961, we'll just call it 16,000 because, remember, you're going to use this more as a guideline than really anything else inside the market. So at 15,961, 15,600, that's really our next primary trading range boundary line that price needs to break above. Now, from a bearish standpoint out here, the bearish standpoint would say when you typically break one of these trading ranges, you like to see it come back and test it. So whether it is a diagonal trading range, such as a descending price channel, such as a rising price channel, like to see price come back and test it. In a horizontal, that's all this is a horizontal price channel. You like to see price come back and test it. Well, when price broke through this area in March of 2013, never really came back to test that area. So if we were to see a bearish reversal signal, or 2 months that were stitched together out here, the likelihood is that price here. Now, the blue squiggly line going across my screen, that's the 9-period EMA. Basil loves to use the 9-period EMA. Let me actually put this on the screen out here. Let me see if I can. How can I do this? Why? Oh, I know what I need to do. Give me one moment here. I should have done this earlier, but I didn't. But we'll do it right now. That way I can actually. So I want to. Oh, it says it showed the values. Why am I not showing the values? Oh, that's interesting. Oh, maybe there's one other thing I don't have turned on. Give me a moment here to check this out. See, I should have had this worked out. No, it's not there. Has me right here. Got to study data. There we go. Now it's turned on. Okay. So that 9-period exponential moving average, which could be a level of support. In this case here, it's out at a price point to 15,217. You're at 15,819. So if we take a look at where the bearish side could be, where the bullish side could be out here, let's say that the bearish side would say, okay, you get a reversal signal inside of the Dow futures. That requires this month a close below 15,524 in the futures contract. If you don't get that, you have not really seen a bearish reversal signal. And then you have to get a confirmation. That means the following month. That means the month of January. You would need to see the same thing. Now remember, what we are in right now is a 6 month. What's the word I want to use? It's the positive seasonal cycle out here. So you can break the year into 2 cycles, one that has a negative bias, one that has a positive bias. Right now we are in the positive bias cycle out here. So because the Dow has not tested that 14,116, if we ever see it close below the 9-period exponential moving average right now while it's in this range here, which is 15,216, you could expect 14,116. But at this stage here, what we have not seen is that bearish reversal signal. That is on the monthly chart. Now let's go see what the weekly chart shows us. What the weekly chart shows us, as soon as I can find that, it shows price here traveling now in that diagonal. That diagonal coming off of the March lows out here, the March 2009 lows, it shows price traveling with inside a rising price channel out here. Now, inside the weeklies, my co-located opens and closes, my primary trading range boundary lines there are not going to match what's on the monthly, because on the weekly chart, you've got price that's, in fact, if we go back and we take a look at the monthly, price never really stays totally 100% within inside these boundaries. Sometimes they'll make a little bit run a little bit higher, a little bit lower out there. And in essence, that's what's really going on inside of in my analysis and taking a look at, that's really what's going on inside the weekly chart. So the weekly chart can have different primary trading range boundary lines when we go ahead and we use an automated tool to identify where the largest number of co-located opens and closes come from. In this case here, 10,425 is the number on the weekly chart. We go back and take a look, it was 10,440 on the, so that's not too bad, on the monthly chart out there. So there is the largest number, either weekly or monthly out here. Now, what we can see is that in the case of the weekly chart, the weekly says, you know what, 16,991 is really its next range that it wants to travel to. And on the weekly chart, the signal that we have here, because it busted through this 14,820 level, let's just simply call it 15,000. And you can see that on a weekly chart out here, we can see that price tested that level on several occasions. So now on the weekly, we use that same 9-period exponential moving average. You can see price right now is traveling just slightly above it. On the weekly chart, the number comes in at, as we speak here right now, on December 17th, that number comes in at 15,759 out here. You're trading out at 15,824. So as long as that area holds, no problem out there. Now, what the weekly chart is saying, if we take a look for reversal signals on the weekly chart, guess what? You do have a little bit of a bearish engulf. Not a little bit. You have a bearish engulfing candle. It is right here. Now, this is a very small-bodied candle the week of November 20th, the week of Thanksgiving. You would expect that. And when it comes to bearish engulfing candles, this one here, to wrap the body of the prior candle, no big deal. Now, last week we had some follow-through. No question we had some follow-through. We saw a little bit of a piercing here of that 9-period exponential moving average. If, in fact, we see a close below that level, that says, you know what, price will probably come back and it'll test at 14,820. And at 14,820, what that would also do, that would run right into this rising price channel. The rising price channel out here, so you've got good horizontal, you've got good diagonal support on any kind of a pullback here. Does that mean that you should sell? It all depends on what your time frames are that you would trade. I would say the answer to that is no if you are taking a look at your long-term holdings. You would need to see a real piercing of that rising price channel in order for you to be able to make that move. In fact, when you are listening to, at least me here, at TFNN, and I'm taking a look at intraday charts or maybe what's going on a daily chart out there, you really shouldn't use, in my opinion, you shouldn't be using the daily time frames to make your longer-term decisions on. Maybe you want to know what's going on inside the daily, but you should always come back and take a look at the weekly chart. That should be your area of focus out here. So that's what's going on the weekly chart. Now, if we take a look at the daily chart here, for the Dow futures, we take a look at the daily time frame, we're going to see that right about the 15,600 level. That on the daily chart is its primary trading range boundary line. What's interesting about the move here yesterday, this is really Sunday evening, when price came down, remember yesterday what we took a look at here on the Dow futures, it completed that A to B equals CD pattern. So let's go take a look at it. That's the A point coming off of the November 29th high. That's at a price level of 16,162. We come all the way down to low on December 4th. That's at a price level of 15,785. We move all the way up to the highs out here on December 6th. And that's at a price level of 16,075. Your 1 to 1.272. A to B equals CD down is 15,596. What the Dow futures got down to was 15,608. So it completed that pattern. Now, it completed that pattern. Nice little bullish candle. What stopped it so far, this is the daily chart that we're looking at, what has been an area of resistance, and it's a place for us to be watching today. It's that 9-period exponential moving average. The question is, does that become a deflection point, or is that a point that we end up seeing in a price getting above that area? Now, with regard to price getting above that area, the number here for us to be paying attention to, 15,844-ish. That number's going to move up and down just simply as the day goes on. So, in this case here, this would say if that area acts as a deflection point, then the 15,600 area, that gets tackled. If we see price move below that, probably it's this black squiggly line on our screen, that 200-day exponential moving average out here, that 200-day that acts as a level of support. You can see that the last time that the market moved down, That was on October 9th as it was making a low. That's the area that held as support. So right now, that actual number out here from a daily standpoint is about 15,072. And right at 15,000, that becomes your primary trading range boundary line. So at this stage here, what we saw here was the completion of a Gartley buy pattern. That Gartley buy pattern looks like this, and it's a beauty out here, the one that formed yesterday. A nice 1.618 expansion. Actually, let's take it off of this swing point here, which is a 0.786 retracement. Give me a moment here. Let's take it off of the swing point from November the 5th all the way up here to the high and right down, and that gives you a nice 0.786 Gartley buy pattern. Now, on that Gartley buy pattern, and that so far this has held, and this means that from a daily basis, you really need to be paying attention to this, because the first move, the logical move, the normal move of a Gartley buy pattern is a move up to the 0.618 level. Well, your first move, your given move, if you will, like your given name, is the 0.382 retracement. It made that yesterday. It made it, in essence, with a wide-ranging bar. The market was up substantially yesterday, substantially, because you need, my opinion, you really need to take a look at what went on Sunday evening as futures were knocked down. And so we traded from a low of 15,608 all the way up to a high of 15,879. What was that? That was a 270-point move yesterday, in essence, intraday. And that really wasn't reported much. I think that we need to pay attention to that, because that is a pretty big move out here. This says that, in fact, if on the daily chart you get above that blue squiggly line, the 9 period, we ought to see price move into the 15,950 range out there. That's your normal price move out here. Now, that could be setting up the next A to B equals CD down, or what that could really be doing is that could be setting up, and what could have set up yesterday was the A to B equals CD up. And to me, when I take a look at the weekly chart, when I take a look at the monthly chart, that's what it actually looks like to me is really unfolding here. That we're seeing an A to B equals CD up. That is going to take us to about the 16,300 level, maybe 16,507 on the daily chart. Right now, flat markets out here. Dow's off 150, S&P's down 4. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's off 9 points right now. S&P is off 5. Leader in the clubhouse on the way down. Russell 2000 up 0.4%. It's down 4 points. The NASDAQ Composite off 12. If we take a look at the intraday chart here for the ES Mini, this is the March contract that we are taking a look at. Not yet reaching the oversold level, but it is approaching that area. Now, the last time that we were down here was when we saw the low come in. This was on Sunday evening, and that was at 11:30 in the evening as the ES Mini got down to the 1754 range out. No, let's see, 12. I'm sorry, I was not. It was 10:30 in the evening out here as it made a low during that session. Now, what I want to point out to you is that as price moves in between this 14 period relative strength, relative weakness indicator out here, when you're getting to the lows out here, what you like to see is you like to see the market also making lower lows, just as it was off of the top here. We come take a look at this is a descending price channel. What you can use here for your touch points on this descending price channel, I would use the open of the session here at 7:30 in the morning on December 10th. I would use the open of the session, let's say at about 10 o'clock at night. That's on the trading session of December 10th. I would use the open at about 10 o'clock in the morning on December the 11th out there. Was that 10 o'clock? Yeah. 10 o'clock in the morning on December 11th. That's going to cement your descending price channel, which, by the way, the ES Mini broke out of with conviction yesterday as we were going into the 10 o'clock hour out here. Now, on the way down, you can see at the time frame at about 9 o'clock in the morning on December the 10th here, price got down towards that oversold level. That relative strength indicator made a low. Next time down, it was about a consolidation to a little bit lower low. That was at about the time frame of 3 in the morning. That was on December 11th. Then the next time down into the oversold condition of the relative strength indicator, you can see it was making a lower low. That's around 11 a.m. around December the 11th. You can see continuing to make lower lows, including the time frame of Sunday evening. Now what we're doing, or what the ES Mini is doing, it's coming down this little pullback here this morning. What it's going to do as it gets down into the oversold condition, it's going to be making what? It's going to be making a higher low. So we've seen a change in trend here in the descending price channel. We saw a test of that area. It was testing it during that 8 to 9:30 time frame here yesterday. We saw a breakout of it. Doesn't mean that price can't come back and try to get back inside here, but that should really be a level of support. Maybe it's somewhere right around 1770 or so. Let's take a look at what the actual retracement is from low to high out here. And on the day, so 1773 is 1773.75 in essence is the 0.382 retracement. That's your dead cat bounce. So far what we've seen here is 1774 is the number that's been hit. So not really much of a pullback when you consider the large move yesterday and it was a huge one. Inside the S&P, we're talking about going from 1754 up to 1786. That was a 32-point move yesterday. It was huge. It wasn't small. It was huge. It was a substantial reversal yesterday out there. We'll see if it'll hold. But right now, what we're seeing as the ES Mini is pulling back, it just made the dead cat bounce. So really no big deal. No reason to be cheering and getting too excited about that. That's just a normal move. 1766 would be a normal move on a pullback as well out here. And then we would likely see here is the ES Mini would get on a 30-minute chart into that oversold condition, and it would be making a higher low out here. So that's our education lesson here as to what's going on inside the markets. If you're off to start your Tuesday, have a terrific Tuesday, folks. I look forward to seeing you in a few minutes or tomorrow morning. Take care and have a great day.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage of TFNN.com to sign up for this once-in-a-lifetime opportunity.